Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Tuesday, the 1st of October here in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Israel sends troops into Lebanon. We have the latest on what's being described as targeted ground raids.
Jerome Powell says the Fed will lower rates over time and insists that the US economy is on solid footing.
Plus, that sinking feeling. Optimism in the UK economy drops to its lowest level since the Liz Truss mini-budget.
Let's start with a roundup of our top stories. Israel has begun what it's calling targeted ground raids in southern Lebanon. The decision to send troops into the country, even in a limited capacity, is a major escalation in Israel's campaign to weaken Hezbollah, the Iran-backed group. Speaking yesterday, when reports began to emerge of a possible ground operation, President Biden offered this response.
I'm more aware than you might know, and I'm comfortable with them stopping. We should have a ceasefire now.
However, President Biden's call for a truce is unlikely to be heeded, with Israel's Prime Minister Benjamin Netanyahu looking to capitalise on Hezbollah's apparent weakness following weeks of attacks and the killing of its leader, Hassan Nasrallah. Before the limited ground incursion, Israeli airstrikes on Lebanon in the past 2 weeks had killed at least 1,000 people and forced hundreds of thousands from their homes, according to local officials.
The picture on the ground is still unclear, but Lebanese media are reporting that Israel has struck the largest Palestinian refugee camp near the country's southern city of Sidon. Elsewhere, Syria's state-run Sana news agency says fighter jets and drones also targeted a number of points in its capital Damascus. It described those as coming from hostile targets, which is usually a reference to Israel. Paul Wallace, who leads our Middle East economic and government coverage, says Israel insists the action has been targeted.
It wasn't inevitable, but it seemed increasingly inevitable in the last few days, given what Israel was doing with its airstrikes into Lebanon. So far, the Israeli military is emphasizing that these are limited raids. They're describing them as limited ground raids in the very south of Lebanon.
Bloomberg's Paul Wallace speaking there. The fear that events could spiral into a wider regional conflict were reinforced overnight after the US announced plans to deploy a few thousand more troops to the Middle East to bolster Israel's defence and deter Iran. Bloomberg understands that the extra forces will mostly be fighter jet squadrons and units already in the region that were due to rotate away.
Jerome Powell has said that Fed policymakers are not in a hurry to lower interest rates, while reiterating that the US economy remains on solid footing. His remarks pushed swaps traders to rein in bets for hefty rate cuts this year.
Looking forward, if the economy evolves broadly as expected, policy will move over time toward a more neutral stance. But we are not on any preset course. The risks are two-sided, and we will continue to make our decisions meeting by meeting.
Jerome Powell speaking there at the NABE Policy Conference. Looking ahead, Friday's US jobs report for September may prove to be pivotal in shedding light on the Fed's rate path. Raphael Bostic told Reuters that he's open to another 50 basis point cut in November if the labour market weakens.
Christine Lagarde says the European Central Bank is becoming more optimistic about getting inflation under control. Speaking during a European Parliament hearing, the ECB president indicated that policymakers will reflect on the progress when voting on monetary policy.
But the latest developments strengthen our confidence that inflation will return to target in a timely manner. We will take that into account in our next monetary policy meeting in October.
Christine Lagarde speaking there, her strongest hint yet of possible momentum gathering among officials for a cut. After the speech, traders added slightly to bets on a quarter-point interest rate reduction from the ECB in October, with money markets implying an 85% chance of such a move.
In the UK, business chiefs are the most pessimistic they have been about the economy since the aftermath of Liz Truss's mini-budget. That's according to a study by the Institute of Directors, which says that fears about potential tax increases and workplace regulation contributed to the drop in its monthly economic confidence index. 38% fewer respondents said that they were optimistic about the economy in September than in July, in the aftermath of the Labour Party's general election victory. The Bank of England policymaker Megan Green says that there is uncertainty about the condition of the economy.
And I would say that different MPC members put different probabilities and risks on different states of the world. But actually, the last vote that we had was an 8-1 split. 8 out of 9 of us voted to hold rates where they are. And so we could have different views of where we are, but still make the same policy decisions in the short term.
Megan Green there, speaking also at the NABE conference in Nashville. The survey also shows investment intentions at a 4-year low, but Anna Leach, chief economist at the IOD, said that the government could boost growth by clarifying its own plans. The Chancellor, Rachel Reeves, will deliver her budget on the 30th of October, having said that she needs to fill a £22 billion fiscal hole.
And in the United States, ports along the east and Gulf coasts have been shut down as dock workers strike for the first time in nearly 5 decades. The action comes after the International Longshoremen Association's efforts to secure higher wages and softened language on automation in their new contract failed before the current agreement expired. The ocean carriers and terminal operators represented by the US Maritime Alliance have accused the union of refusing to negotiate since it called off talks in June. JP Morgan estimates that the cost of the walkout, which started just after midnight Eastern time, will be between $3.8 and $4.5 billion a day. In a moment, we'll bring you more on what's happening on the Israel-Lebanon border, plus dig into the latest commentary from top central bankers. But just one more event that we're keeping our eye on today, and that's the budget in Ireland. A very different conversation being had around the budget in Ireland versus what we're hearing in the UK. You mentioned the fiscal hole that Chancellor Rachel Reeves has had to do and the warning of tough choices ahead. Ireland is unusual among European countries in that it has a budget surplus. They're talking about a giveaway budget, huge corporate tax receipts. Of course, lots of warnings around the instability of that money to come, but there are expectations there's going to be increases in welfare payments and student grants. Voters who are thinking about an election that's going to happen in February are going to be thinking too, though, about any big announcements around housing, a chronic issue facing the Irish economy as well. We'll also be listening out to see if there's any hints as to what the Irish government might do with that 14 billion euros it's getting as a tax settlement from Apple after the recent European court ruling. So one to watch later on.
Yeah, OK, that's interesting pointer. Thank you for that, Stephen. Now, let's bring you the latest on the events in the Middle East, where Israel has begun what it is calling targeted ground raids in southern Lebanon. Joining us now is our Israel Bureau Chief and Senior Editor Ethan Bronner. Good morning, Ethan. How far into Lebanon is Israel targeting these ground raids? What do we know about what is happening?
We don't know an enormous amount. We're due for a briefing later today by the military, and even then I'm not sure we'll get that level of detail. My instinct is that it's something in the 5 to 10 kilometer range that they're going in. That's where a lot of short-range Hezbollah sites are located, and which they want to, quote-unquote, clean out in order to make it possible eventually to bring their residents back to their homes in the north. That's the goal.
How significant an escalation is this when we're thinking about almost a year of fire being exchanged across this border?
Well, it's a very significant increase in activity. There's no question about that. I mean, ground troops are always another whole level of involvement. Israel has gone in on and off over the last 25 years, of course. Began in 78, and then there was a major invasion in 82, in which it stayed for 18 years. Then, of course, there was the 06 war that lasted just over a month. Look, I think that all of that experience, in theory, will inform their desire not to stay for too long and not to go in too deep and not to run the risk of losing soldiers to captivity and so on. But obviously the concern is over mission creep and over what is actually awaiting them. They did send in commandos before over the last weeks to see what they're facing. So in theory, they have a clearer idea.
Diplomatic efforts seem very distant then from the realities on the ground. The Netanyahu government, though, doesn't seem to be heeding US calls and hasn't seemed to, repeatedly. Why not?
Well, obviously, there are a distinct sense of what the goal is. I think that for the United States and for much of the world, calm is the goal. Israel doesn't see calm as the goal. Israel sees pushing Hezbollah back as its goal. It doesn't believe that that's doable via diplomacy. I'll remind you that after the 06 war, there was Resolution 1701 unanimously adopted by the Security Council and agreed to by Hezbollah and the Lebanese government, which involved Hezbollah disarming and going back 30 kilometers from the Israeli border. None of that happened. That was a diplomatic operation that didn't produce results. That's how Israel views it, that it has to do it by force.
What are the risks of a form of retaliation for this sort of these ground raids? I mean, we haven't heard much from Iran in recent days.
Yes. Well, that's of course the massive question in terms of whether there'll be a true regional war, whether this will really spin out of control. I mean, these are the great mysteries of the last few weeks, that until 2 or 3 weeks ago, we believed that Hezbollah was capable of shooting thousands of long-range precise missiles at Israel, including at Tel Aviv, over a period of weeks. And we have seen one. In total. Now, obviously, Israel took out their command and control people through exploding pagers and walkie-talkies, and then they took out a couple of thousand launcher sites, and they've done enormous damage to Hezbollah. But, it's very difficult to assess whether there's some stuff in waiting that's going to come back at Israel, or whether it's actually unable to react. And the same is true of what Iran is able to do. I think these are the great mysteries. I don't know how to answer that.
Yeah, enormous questions. What should we be thinking about then today? You mentioned the briefing, the enormous human toll also.
Of course, in Lebanon, absolutely.
Yeah, we have to say.
Look, yes, I mean, there are many, many hundreds of people dead and many more wounded in Lebanon. Lebanon is in a terrible situation. They are bearing the brunt of this. They're sort of between the squeeze between Hezbollah and Israel, and it's terribly sad. There's that human toll, but the larger geopolitical and diplomatic questions are the ones we need to watch. What will be Hezbollah's response? What will be Iran's response? How deep will Israel go in? How long will this last? Those are the questions you posed, and those are the right questions. And that's why we all have jobs, because we don't know the answers in advance. We have to report this out.
Okay, Ethan, thanks very much for bringing us the latest this morning from Israel. Our Israel Bureau Chief and Senior Editor Ethan Bronner.
Now, the Federal Reserve Chair says that the US Central Bank is not in a hurry to lower interest rates, again underlining that policymakers will focus on the economic data. Jerome Powell's comments contrast with those from the ECB President Christine Lagarde, who hinted at an October interest rate cut in comments to the European Parliament. Joining us now to discuss is our Executive Editor for Asia Markets, Paul Dobson. Paul, good morning. In terms of Jerome Powell, did he say anything that, in terms of dispelling the idea that there are rate cuts to come? There seemed to be a ratcheting back in terms of the 50 basis point idea.
Yeah, good morning, Caroline. I think that would be the way to interpret it. Nobody thinks that the Fed won't cut again in November. It's all about the scale of the cut, having started lowering interest rates with a 50 basis point move in September. So people are asking themselves whether that will be followed up by another large sizable cut of 50 basis points or a 25. The tone that Powell took was maybe a little bit of a surprise to the market, and maybe just that little bit more hawkish than we had been expecting, perhaps. As you said, sort of talking about a robust labour market, even as inflation starts to come down as the Fed would like it. And so the net result of that was it pushed up short-term US interest rates somewhat, had people pairing those bets a little bit on how aggressive the Fed might be. With that in mind, or keeping that in mind at least, the market is still sort of on the fence here, and maybe more leaning towards the idea that at some point this year there will be a second cut of that magnitude.
OK, so slightly different messaging we were getting from Christine Lagarde from the ECB when she spoke to the European Parliament yesterday as well. She, on the other hand, is sort of encouraging the idea that there could be a rate cut to come in October.
Yeah, I think that's the takeaway the market took from Christine Lagarde's comments, giving a little bit more confidence in the idea that inflation is slowing at a faster pace, if that makes sense. I think that for Lagarde, that's a better message to be presenting than, oh dear, the economy doesn't look very good, which is something that she sort of said a little bit kind of in between the lines as well. So at least confidence on inflation means that the ECB can get on with lowering interest rates. If she can corral the large number of policymakers helping her make that decision, then we could get another one as soon as this month.
In terms of what the shifting rate cut bets mean for Asia, also quite big moves in terms of Japanese stocks and the yen.
Yeah, so I think the most important way that those two play out is obviously in the euro against the dollar, or in the relative interest rates on German and US securities. US yields rose relative to Germany's, and so that gave the euro some support. But also the idea that the Fed might not be quite so aggressive in its interest rates is supportive for the US dollar against Asian currencies, which have been on this very big tear on the idea that the Fed is cutting, and that will ease some of the pressure on markets over here. So we've seen a little bit of knee-jerk weakness across Asia's FX markets today. I think the longer-term trajectory, it's hard to say that this is a major turning point. That trend has been pretty well established, with the first day in a new quarter of trading after a very strong rally as well.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.